Hi Mortgage Heroes, Andy Cruz here in Business Development, and this is your weekly video newsletter. This week we're going to talk about two things. We're going to talk about the Freddie Mac CEO stepping down last week and announcing his departure in January, right before the inauguration. And then we also have an update on mortgage delinquencies, which is pretty telling as to what could happen in 2021. So first things first, let's talk about the CEO of Freddie Mac announcing last week that he is going to step down in his role as CEO of Freddie Mac in January of 2021. It will be about a week and a half right before the inauguration, but most people are saying that this is because his objective and his role as leader in trying to get the agency out of conservatorship is unlikely to happen with the new Biden administration taking over in January 20th. So once all that happens on the calendar and we get to that point in time, what's likely to happen is that the Fannie Mae and Freddie Mac GSAs, the government-sponsored agencies, will stay in conservatorship. That's what everyone's saying. The goal of putting them back out on the private market looks like that's not going to happen now the way that the election has all unfolded. And it is highly likely that the new administration is going to keep them in conservatorship. What that means, though, is that they're probably going to put back into place other regulations, other oversights, which actually means more costs into keeping them. So for a couple of years now, they've been raising money and saving money to get out of conservatorship and back onto the open marketplace to be able to separate from the government's oversight, but that is looks like that's not going to happen. And in order to keep them up and running and functioning with even greater oversight, we are potentially looking at there being new fees or new costs coming in 2021, or maybe even if it's not that quick, it could be in 2022. But assuming that they are kept in conservatorship, it looks like there will be additional regulations. There will be people put back into the CFPB for oversight and regulation, as well as additional costs coming back into the marketplace, some of which we were able to get away from, but looks like that might be on the horizon for us. So what that exactly means is yet to be seen, because we're obviously not there yet. But it looks like that's the way it's going, and if that's the case, we'll probably see some new announcements coming out either in the end of December or beginning of January as to what that might look like and how that might impact mortgages moving forward and the cost of money when it comes to borrowing. Latest mortgage delinquency data through August 2020 just came out, and what we're seeing is the mortgages that are late moving further and further in the delinquency life cycle. So loans that were current becoming 30 days late, 30 days late becoming 60, 60 days late becoming 90, 90 becoming 120. So on the graph you see here, we see loans compared to 2019, a much higher rate of loans that are going into 30 days late, about the same from 30 to 60, more 60 to 90, definitely more going from 90 to 120, and then a substantial amount of loans becoming 120 days or more past due. Now that is only through August of 2020. We have not seen any of the months that are coming due, such as September, October, the month we're in, November. All this information is going to be coming out. It's trailing record. So all this information is going to be coming out in the months ahead. At the same time, though, it's going to be the months where people's unemployment extension is running out. We have people's mortgage forbearances. They're like either exiting, or they're able to refinance, or they're paying some of their loan back. And so that's going to impact these numbers a little bit. But what's really crazy is what you're going to see next, which is the transition rates. The transition rates of loans moving from 30 to 60 days is twice what they were last year at this time. And the amount of loans going from 60 to 90 days late is more than twice it was a year ago. So this right here is a primary indication that not only are we having the people in millions of people in forbearance, but the amount of delinquencies has had a huge spike when it comes from moving from one stage of delinquency to the next. Now, once we get September's data and October data, the picture becomes even more clear as to what this is going to mean. But as of now, this is not a good sign. What this means is that you're going to have hundreds of thousands, if not millions of homes, which will eventually become 120 days late. And if and when the forbearance period ends, or they actually get into the pre-foreclosure process, you will likely see foreclosures starting to hit the market. The only thing I can at this point say would stop that process would be some sort of intervention. Again, if this means that the Fannie Mae and Freddie Mac government-sponsored agencies stay in conservatorship, thereby the government has the ability to enact some sort of order that extends moratoriums or extends the length of time that we have forbearance is offered, or if there's some other deal that comes out of this, I don't know, but we're getting to that point where by the time December comes and January rolls around, these loans that are 60 will be 90 and 120, and the loans that are 90 days late will be 120 and 150, and now you're knocking at the door of pre-foreclosure. So I'm really curious to see what's going to happen with all this as it pertains to the timing of the new administration coming in, as well as the actual stage of late delinquency that these mortgages will be in at that same time. So it would not surprise me if we see some really broad and specific kind of overarching rules or decisions made around housing and mortgages and real estate right away in January once the inauguration is concluded. It could be in that first 100 days when a new president takes office. What are they going to accomplish? I would not be surprised to see if something with housing and mortgages and Fannie Mae and Freddie Mac happen in that first 100 days. I just have a hard time thinking it won't happen. So if you are in a position right now where maybe you're watching this and you're in that situation, you can reach out to us and we can kind of answer questions you might have regarding your situation or what options might be. If you were in forbearance and you're out of forbearance, there still might be options in the marketplace for you with the current rate environment we have and underwriting guidelines that there are. And then if you're in a position where you need to sell your house and you are late on your mortgage and you need help, please reach out to us so that we can understand what it is your needs are and then help connect you to someone who could help you get out from underneath the weight of being delinquent and late on your house payment and move towards a solution that's better financially for you. So there are still options, of course, depending on your type of loan and what your economic situation is regarding, you can still have some forbearance options, but if you are getting to the end of that, or it's just not looking like that's going to be a long-term solution for you beyond this coming winter season and spring, then please let us know so that we can at least understand what the circumstances are and then help you get in contact with someone who can advise you on what the right moves are for you and your home. So thank you so much for watching this week. We really do hope that this is valuable information for you, but that you'll take action on it and that you'll reach out to us so we can help you in your time of need. And if this is relatable to someone you know in your family or you work with or a friend who you kind of know is dealing with a situation like this, send this to them. I hope this gives them some clarification and some insight as to what we think is happening, and then let us know how we can help people, because we've been in this situation before. We've been doing this since 2005, and we've seen the 2008s and 2009s and lived through it and come out on the other side. So we can speak from a place of firsthand experience and account on how to properly advise people in the right direction to make the next right step in real estate. So please have confidence in that, share this with others, and we appreciate your time and attention. Have a great week, and we'll talk to you again next week. Thanks.